Equipment repair financing, keeping your business running smoothly. As a business owner, you know that unexpected equipment breakdowns can be a major headache. Not only do they disrupt your operations and halt productivity, but the repair costs can also put a strain on your cash flow. That's where equipment repair financing comes in, a solution that can help you get your mission-critical machinery up and running again without breaking the bank. In this video, we'll explore everything you need to know about equipment repair financing, from its benefits and financing options to how to find the right lender for your business needs. Let's dive in. What is equipment repair financing? Equipment repair financing is a specialized lending solution designed to help businesses cover the costs of repairing or maintaining their essential equipment. Unlike traditional equipment financing, which focuses on acquiring new machinery, repair financing is tailored specifically for unexpected breakdowns and necessary maintenance. Key benefits of equipment repair financing. 1. Maintain cash flow. Repairing equipment can be a significant expense, especially for small businesses. Equipment repair financing allows you to spread these costs over time, avoiding a large upfront payment that could strain your cash flow. 2. Minimize operational downtime. When crucial machinery breaks down, every minute of downtime can translate to lost productivity and revenue. With repair financing, you can get your equipment back in working order quickly, minimizing disruptions to your operations. 3. Preserve capital for growth. Rather than tying up your working capital in expensive repairs, equipment repair financing frees up those funds for other growth opportunities or investments in your business. 4. Potential tax benefits. Depending on your specific situation, the interest paid on equipment repair financing may be tax deductible. Consult with a tax professional to understand the potential tax implications for your business. Types of equipment commonly repaired with financing. Equipment repair financing can be utilized for a wide range of machinery and assets across various industries. Here are a few examples. 1. Construction, excavators, cranes, bulldozers, and other heavy equipment. 2. Manufacturing, CNC machines, industrial robots, production lines. 3. Transportation, trucks, trailers, forklifts. 4. Medical, MRI machines, X-ray equipment, surgical tools. 5. Hospitality, commercial ovens, dishwashers, refrigeration units. Essentially, if it's a critical piece of equipment that your business relies on, repair financing can help keep it running smoothly. Financing options for equipment repairs. When it comes to financing equipment repairs, businesses have several options to choose from, each with its own advantages and considerations. Traditional equipment loans. One of the most common financing solutions is a traditional equipment loan. With this option, you borrow a lump sum from a lender to cover the repair costs, and then repay the loan over a predetermined period, typically ranging from 1 to 5 years. Pros. 1. Straightforward and familiar process. 2. Ownership of the equipment once the loan is repaid. 3. Fixed interest rates and predictable monthly payments. Cons. 1. Collateral. The equipment itself is often required. 2. Strict credit requirements, especially for larger loan amounts. Alternative financing options. In addition to traditional loans, alternative financing solutions can provide more flexibility and accessibility for businesses, particularly those with less than perfect credit or unique circumstances. 1. Lease to ownership. With this option, you essentially lease the repaired equipment from the lender, making monthly payments. At the end of the lease term, you have the option to purchase the equipment for a predetermined residual value. 2. Credit lines specifically for repairs. Some lenders offer specialized credit lines or revolving financing options designed specifically for equipment repairs and maintenance. These can provide ongoing access to funds as needed, rather than a lump sum loan. 3. Invoice factoring. If your business struggles with cash flow due to slow-paying customers, invoice factoring can be a solution. You sell your outstanding invoices to a factoring company at a discount, providing immediate cash that can be used for equipment repairs. Considerations for businesses seeking repair financing. Loan terms and creditworthiness. When evaluating equipment repair financing options, it's crucial to consider the loan terms and creditworthiness requirements. Lenders typically offer more favorable terms, such as lower interest rates and longer repayment periods, to businesses with strong credit histories and financial stability. Small businesses or those with less than perfect credit may face higher interest rates or shorter loan terms, which can impact the overall cost of financing. In these cases, alternative financing options like lease to ownership or credit lines may be more viable solutions. Repair shop integration. Another factor to consider is the potential for repair shops to partner with lenders and offer financing options directly to their customers. This can streamline the process and make it more convenient for businesses to secure financing at the point of service. Many repair shops have established relationships with lenders and can facilitate the application process, helping businesses find the right financing solution for their specific needs. Finding the right lender for equipment repair financing. With numerous lenders offering equipment repair financing, it's crucial to find the right partner for your business. Here are some key factors to consider. 1. Specialization in equipment financing. Look for lenders that specialize in equipment financing, as they will have a better understanding of the unique challenges and requirements involved in repairing and maintaining machinery. 2. Industry expertise. While some lenders cater to a broad range of industries, others may have expertise in specific sectors, such as construction, manufacturing, or transportation. Choosing a lender with industry-specific knowledge can be advantageous. 3. Competitive rates and terms. Compare interest rates, fees, and repayment terms across multiple lenders to ensure you're getting the best deal for your business. Don't be afraid to negotiate for better terms, especially if you have a strong credit profile. 4. Customer service and support. Look for lenders that prioritize customer service and are responsive to your needs. The ability to work with a dedicated account manager or representative can make the financing process smoother and more efficient. 5. Online resources and tools. In today's digital age, many lenders offer online resources, calculators, and application portals to streamline the financing process. These tools can be incredibly valuable, especially for busy business owners. Real-world success stories. Equipment repair financing in action. To illustrate the power of equipment repair financing, let's explore a few real-world success stories from businesses across various industries. Case Study 1. Construction company avoids costly downtime. ABC Construction Company found itself in a precarious situation when one of its excavators broke down unexpectedly on a major project site. With a tight deadline looming, the company couldn't afford the downtime required for repairs, nor could it absorb the $50,000 repair cost without jeopardizing its cash flow. After exploring their options, ABC Construction secured an equipment repair loan from a specialized lender. Within a week, the excavator was repaired, and the project was back on track without any significant delays or financial strain on the company. Case Study 2. Manufacturer stays competitive with up-to-date machinery. XYZ Manufacturing, a leading producer of precision components, had been experiencing increased maintenance costs and downtime due to aging machinery on their production line. To remain competitive and meet growing demand, the company needed to invest in repairs and upgrades for their CNC machines. Through a lease-to-ownership financing agreement, XYZ Manufacturing was able to overhaul their equipment, significantly reducing downtime and increasing efficiency. The flexible financing terms allowed the company to spread the costs over several years, minimizing the impact on their cash flow while ensuring they had access to the latest technology. Case Study 3. Truck repair shop offers financing to retain customers. Big Rig Repairs, a trusted truck repair shop, had been losing customers due to their inability to offer financing options for major repairs. Many trucking companies and owner-operators simply couldn't afford the upfront costs, forcing them to seek alternative repair shops that provided financing. To remain competitive and retain their customer base, Big Rig Repairs partnered with a specialized equipment financing lender. By offering repair financing directly to their customers, the shop not only increased customer loyalty, but also saw a significant boost in revenue as more truckers could afford the necessary repairs and maintenance. These success stories demonstrate the tangible benefits of equipment repair financing for businesses across various industries. From avoiding costly downtime and maintaining cash flow to staying competitive and retaining customers, repair financing can be a game changer for companies that rely on functional equipment to drive their operations. Key takeaways: unlocking the power of equipment repair financing. As we've explored in this comprehensive video, equipment repair financing is a powerful tool for businesses to address unexpected repairs, maintain cash flow, and keep their operations running smoothly. Here are the key takeaways. 1. Equipment repair financing is a specialized lending solution designed to help businesses cover the costs of repairing or maintaining their essential equipment, distinct from traditional equipment financing for new machinery. 2. The benefits of repair financing include maintaining cash flow, minimizing operational downtime, preserving capital for growth, and potential tax advantages. 3. Financing options range from traditional equipment loans to alternative solutions like lease to ownership, credit lines, and invoice factoring. 4. Factors like loan terms, creditworthiness, and repair shop integration should be considered when seeking repair financing. 5. Finding the right lender that specializes in equipment financing, understands your industry, offers competitive rates and terms, and provides excellent customer service is crucial. 6. Real-world success stories showcase how equipment repair financing has helped businesses across various industries avoid costly downtime, stay competitive, and retain customers. Don't let unexpected equipment breakdowns derail your business operations and growth. Explore equipment repair financing today and take the first step towards ensuring your mission-critical machinery stays up and running, no matter what challenges arise. Ready to unlock the power of equipment repair financing for your business? Call 888-653-0124 today or click the link below to learn more about our 1-minute application process and share your success story.